So I don't know exactly what sequence you're watching these videos in, but this video is supposed to come after the Schedule C, because we discussed the item that we're going to talk about in that video. And the item we're discussing now is depreciation. Depreciation for some is can seem sort of daunting, I don't know, it's really not that big a deal. We're taking something that has a useful life for a period of time and we're expensing it out over a period of time, or we're expensing it all in one period based on the rules for that item. So you may need to do some research here and there, but as it relates to overall, it's a pretty straightforward item. So I'm just going to click into depreciation here. I'm going to click into assets. I'm going to put a description of the asset in, and we will call this a computer. And we bought it on 1/1 of 2016, and it was $2,000, and it was 100% business use, not 1,000%. Again, just showing you guys, if you make an error, it's really easy to see. We have no prior year, no accumulated depreciation method. I'm just going to go 3-year, and we'll say that that's how long it's used for, which I believe is accurate. And that is really all that's to it for a basic asset. So we're just going to click continue here, and then we'll do something else. We'll do something like a tractor, and 1/1 of 2016, $25,000, 100% business use, not 1,000. And then there are special rules. I'm not going to jump into them because I don't want to overly complicate things. But there are rules related to Section 179 deduction based on the revenue of your business, the size of your business, and then the amount that you spend within that year for certain purchases of equipment, that you can write them all off in that current year as opposed to depreciating them out over a period of time. So that's something to look into that may be advantageous for your clients. I'm not even going to give a super clear scenario just because it's all based on the situation. So let's go in here, and we have a tractor and depreciation method. We're just going to straight line this. And I don't remember what the useful life, 7 years, let's just say. And the cost we already put in, the basis, so $25,000. Click continue. All right, so you would just add all of those assets up over and have them depreciate out over the useful life of that item, unless Section 179 applies in that scenario, in which case you can potentially take all of that within the expense of that within that first year. So hopefully that showed you guys some stuff. There obviously is more items in here with respect to listed property, and those are treated a little bit differently as well. But that gives you kind of the basis of how to navigate through the depreciation, and it should be fairly comfortable. If you guys have any challenges, definitely give us a call. But just wanted to introduce the topic of depreciation to you and the look and feel and flow of that section. Hope this helps. Thanks so much.